Welcome to live sessions presented by HDFC Life in partnership with ET Now. In a world of increasing financial options, one thing remains timeless: the need for protection. Today, we go beyond products to unpack insights, intent, and impact, especially at a time when India's protection gap is still a major concern despite rising income levels and growing awareness. We're joined by two industry leaders whose institutions have consistently shaped India's financial landscape: HDFC Bank and HDFC Life. With deep roots and a shared commitment to India's financial security, they bring a unique vantage point where data meets trust, technology meets tradition, and scale meets social purpose. Let's welcome our guests for today, Ms. Ashima Bhat, Group Head, HDFC Bank, and Mr. Lavneesh Gupta, Executive Committee Member and Chief Bancassurance Officer, HDFC Life. Both of you, thank you so much for your time. Ashima, let me start off with you. The wider lens on the industry. When you talk about rising awareness, it's there. When you talk about rising income levels, it's there. But there's still so much parity between what India has done, our penetration levels when it comes to protection as opposed to some of the larger economies. I'm not even going to get into the numbers here. What do you think can be done to bridge the gap?
So Aisha, thank you for having us here. I think very important thing to remember is that there's insurance always a thought that when we talk about insurance, it's inauspicious. Plus, insurance is also considered an expense rather than an investment. So that's a very important factor that comes in. What can change to make that happen is a lot of awareness about insurance products. There is also, I think, a lot of need to demystify insurance products. Very important to make sure that people understand what they're getting into, and that will go a long way, plus making it easier for access. So those are the things that should change the way people look at insurance, specifically life insurance.
Right. And Lavneesh, exactly picking up from the broader picture that Ashima just said, what needs to fundamentally change to try and shift this mindset? Because like Ashima is saying, it's more about mindset. It's about how we think about insurance.
Thank you, Aisha, for having us over again. And what we have to look at is how much is the awareness about this product in terms of classifying what life insurance is all about. Typically, if you look, insurance plans are divided between protection, you have savings, and then you have a retirement segments. What happens is that people in today's time still are not aware of what are the products they're buying. And that's where the intermediary and the manufacturer of the products need to demystify those. If you look at life insurance, pure term risk is a pure risk where if somebody dies and you get the benefit to the beneficiary. That's a pure risk. There are plans which is covering, and those are affordable plans because you pay something and you get a coverage. The problem is that not many people are aware of it, and they tend to fall into a life insurance with savings component. Now those are market linked or non-market linked products which are there and called endowment insurance which is there. Now the objective of us is to take the person to that scheme that if you buy an affordable, there's a pure risk plan which is there in your scheme of things, and that's what we should look forward to, educate people and the ecosystem about it. And that's where the joint work of whatever is the insurer doing and whatever the intermediary or the bank or the distribution team is doing towards buying the relevant product in the ecosystem. So I think that's a journey which we have to walk through.
Great. So let's break it down for our viewers and let's try to de-jargonize and simplify it for our viewers. Ashima, how does a protection plan work in terms of the risks it could cover for you?
See, if you look at a protection plan, I think the risks obviously is the risk of, the family being able to sustain post any event that would happen. So you have to make people understand that, and to understand the fact that it's not just like any other product. A lot of people would look at insurance, like I said earlier, as more of an expense. They don't think of it as coverage for the family, coverage for any unforeseen event, and to take care of the family's education, for the marriage or whatever. So that is something that needs to change. The awareness of how insurance has to be delivered, and the fact that insurance companies are here to pay the claims. There's also a very strong fear that, in the event that it's needed, the insurance company may not come forward, which is absolutely wrong. So a lot of those things need to change to make the industry and the consumers aware of how insurance should be delivered.
Lavneesh, what are, when you talk about a protection plan, tell me what are the lesser known riders, the clauses that a customer must absolutely know before even picking up a policy?
Yeah, so I think pure risk is what we discussed just now about what it is that you pay a premium and you cover a risk, and there's a coverage period, and in case if you die, the beneficiary gets the money. But in rider, there's different types of riders, which is a critical illness you have accidental death benefit rider, there is a waiver of premium. Now, these are very technical terms which are spoken about by each one of us. Critical illness is there are about 90 plus critical illnesses to be covered, which a human being is not aware of what are the critical illness it can fall, and it keeps on adding every year. And thanks to COVID, it's getting added more and more every year. So critical illness is one functionality which pays the beneficiary or the individual, he's still alive, to take care so that he survives. So it's a very important benefit to have as a rider. Accidental death benefit is a requirement which doubles up the cover, so that with a small premium being paid, the person, if he dies accidentally, gets a base cover which is through the pure risk plus the accidental death benefit which is coming. And the third is in case if he's got a return of premium in pure risk, then he has a waiver of premium, that in case if he dies, the beneficiary will get the lump sum which is there as a return of premium. So I think these are very important riders which people should know when to buy this journey as a product.
Right. So, the other thing, of course, Lavneesh, also is in today's financial markets, customers are also overwhelmed with investment choices, right? SIPs, ULIPs, health plans, saving instrument. You don't know what to pick for what, right? Yeah. Sometimes, I mean, for a common man, even the jargons can be so intimidating, to begin with. Yeah. What should one check in terms of, if I were to ask you, what are the 4 to 5 things that one must check and are non-negotiable before picking up any insurance asset?
So I think there's plethora of products, and I think distribution channels, banks, brokers the customers reach out, and there are multiple, like what you mentioned about the asset allocation. But clearly certain non-negotiables are there. So if you're getting into protection, then are you adequately covering? So I mean, just before we meeting, me and Ashima, we were discussing, people are insured, but are they underinsured or adequately insured? Now, so one is that, what is the coverage period? Is it covered till the retirement, or is it covering also the liabilities till when he has to have? Ideally, a thumb rule is that 10 to 15 times of the annual income should be the coverage amount. And till the retirement or till the time when he has the liabilities on the book, he should cover that. I think these are the 2 non-negotiables. Apart from it, I think we should have the riders, as I mentioned previously, which are, critical illness and accidental death benefit is a clear non-negotiable. What people generally make a mistake is that they tend to avoid the adequate sum assured. They don't estimate their life is as important. Unfortunately, in the country, there's no social security, and the beneficiaries left, driving.
And we're all living longer, much beyond our retirement age.
Much beyond. So I think these are the clear non-negotiable and the mistakes which people, definitely make.
Interesting. Ashima, one of the more underserved yet extremely high potential, completely underpenetrated segment is perhaps Tier 2, Tier 3 cities, B30, etc., all those segments. Tell me, what does a typical customer in these segments or pockets looks like? What are their needs? What are their requirements? And more importantly, what's their relationship with insurance? How accepting are they?
So Aisha, I think the customers in a Tier 2 or 3 towns are they're very aware. I think over the last few years, we've seen the awareness increase in terms of insurance products. Obviously, COVID had a lot of role to play in that. Big
impact, yes.
But what is very important is the financial literacy in the Tier 4, and the awareness is there, but the importance of insurance products is not still understood. I think the insurance companies are also working on their awareness, mainly because it has to be like a case. Why do I need insurance? And the only way to explain it in these kind of smaller towns or cities is by increasing like a influencer of sorts. Somebody who can say that this benefited me because I had insurance. So that awareness has to increase. The consumer is very much, I think the market is very much available, but the awareness, and also awareness in more of a vernacular kind of medium.
Language.
You have to speak the language. You can't go and imagine that a metro or an urban is going to be, it's not a cut and paste kind of scenario. So that market has to be handled differently. Use what is available in the market, the self-help groups, the women's groups. I think one of the segment which is consistently underplayed is the women's segment. And they are in the rural markets playing a larger and larger role in financial decisions for the family. So if their financial literacy and education increases on insurance, that will go a long way in helping the insurance penetration in these markets.
Yeah, absolutely. And I think it's only a misconception. We only talk about urban centers and women workforce getting added by the day. But in the rural segments, women have always worked.
They've always worked. They've worked in farms, they've worked in their own livelihood. And while they are not considered to be the financial decision makers, we are seeing a shift in that happening. Because if the woman kind of develops and she's earning, she is contributing to the financial well-being of the family.
And that's the thing, right, Lavneesh? I mean, what Ashima was saying, that especially since COVID, one has seen a drastic change in the awareness. And more importantly, I think, what COVID taught you was you need to be insured. Anything could happen. In our lifetimes, this was a one-off event, or in the last 100 years, and we saw it so up close and personal, right? So tell me, what is it that can be done, and where is it that insurance players can actually come in and try and sort of meet that requirement? I mean, is it via digital? Is it physical? Is it word to word, mouth to mouth? How do you go about such a large process?
So I think it's a mix of all three. So it's not going to be purely digital. So a lot of things have been pure digital, have also not worked in the financial ecosystem. So I mean, everybody has tried. There have been many fintechs as well. You need to put a warm body behind whatever you're selling, and especially a complicated product like insurance. But having said which, I think COVID has taught people that how the process can be digitized, how we can reduce the workload in terms of paperwork. And it's very important that earlier, which was purely in person, now there is a generation which is, more metro generation, or a millennial or a Gen Z, which prefer do-it-yourself journeys. For which you have those systems.
They don't trust anything other than the apps, right?
Yes, so they are just a firm believer of that. So also the financial ecosystem with the regulator support on eKYC and those availability to verify KYC, those journeys have become much more easier for us to do than only in person. Having said that, I think purely digital is very difficult to have as an interaction for a complicated product like insurance. But the journeys are end-to-end journeys in some of the cases have now turned to about 91% in digital as an insurer, which is a case in point that there is a need for it. Plus, I think the more important part is post-purchase, what are your support and service items which are working? Are those digitally enabled or not? And so those are the works which has helped us in terms of interacting with them, whether now you hear the word Gen AI or AI, which is there. You've created the AI chatbots. Now, people in late nights also interact to understand what they've bought, what kind of product is there. And insurance is something which never people used to do it earlier. People can talk about their NAVs or this thing, but I'm very surprised that people are now talking about insurance, how their mutual funds, the ULIP statements look like, how they're performing, what is the insurance coverage. So I think digital per se is penetrating. Having said that, the 5% of the business still comes from digital. It's not as big as what you see right now. Technically, we have to have the hybrid of all and the good of mix of all these channels which we are looking forward to.
So much like the consumer, where is it that in the industry you've seen that big change happening? I mean, is it in customer objections, sales training, products expectations? And more importantly, how are sales teams in today's day and age equipped to try and meet a very evolving customer and at a very fast pace?
So I think insurance, if I date back when it got privatized and when from the earlier times to now, I think product has really changed a lot.
Of course.
From a very opaque product, which people were not interested in buying, where the first year premium used to go in the charges. Today, it's become much more valid in terms of looking at market link, non-market link, guaranteed products. If you see, we've been one of the product innovators. We started with Click to Protect series for term. We did it for the, for the retirement schemes, and also our Sanchay series have been a classic product which got copied in the industry, much against everybody's belief that it became the super blockbuster.
Totally.
And those are more of guaranteed platform products, which was not the case in insurance industry forever. So I think product innovation has definitely helped remove a little bit of taboo from insurance. But how we sell it and what way we sell it is the most key element going forward in terms of sales training you touched upon, is our continuous endeavor that how do we ensure that the customers are being spoken rightly and we convey the right theme of the product, underlying product which we are trying to sell.
Ashima, how does HDFC Bank leverage its very large customer base to try and tap in and bridge the protection gap which India is currently sitting on?
Yes, you're right. We have a very large customer base, almost close to about 10 crore customers in the bank. We leverage a lot of technology, so we can provide the nudges at the right life cycle of the customer. And typically somebody who's joining the workforce, then at some point of time, when they're getting married and with children. So we make sure that the analytics and the data is available to provide the right nudges on what product will work at what point in time. That really helps us kind of make the understanding of insurance. And if we talk in the bank and we talked about the sales teams, etc., the point is, if I understand and I have demystified insurance for myself, I can sell it much better. So we've realized over the years that, and while we talk about Gen Z, I must say they're exceptionally financially savvy. Their mode of consumption may be very different. They may want more digital and click and single click and double click. But they are very financially savvy and they're very well aware of what their investments are, which is not something that was typically an earlier generation. So if you use this team, they understand why insurance is important. And this actually is the COVID generation, so they understand it completely. So that really helps us reach out to the customer, because they use their own experiences and their own examples to, I won't say sell, but to kind of right fit the product.
Give me some example that you came across.
So I have a very large team, a young team, which handles, for example, the non-physical banking, which is the virtual. When we realized, when we started asking them to talk about insurance, we realized that for them in their early 20s or early 30s, so when they understood that insurance was important, be it health or be it life, is when it started working for us. Because they started taking smaller insurance for themselves to cover their family, and then it became so much easier for them to convince their customers as well. So there are thousands of examples like that, and a lot of success stories in that. The same stories repeated in rural India as well.
Oh, absolutely. But Lavneesh, this year HDFC Life completes 25 years. You've literally seen the entire spectrum of transition that has happened in the insurance industry, and it's pretty much a journey that sort of mirrors India's life and progress as well. What has this milestone meant for you, and what does the journey of 25 years encapsulate? Silver Jubilee.
Yeah, I think it's a very proud moment for everyone in HDFC Life, and of course our promoter HDFC Bank as well, in terms of supporting through this journey. As I mentioned in the last point, that the product innovation has been a key driver for HDFC Life in these 25 years. Whatever we have been able to achieve over a period of time is how we have changed looking at the narrative of life insurance as a product segment. We never saw product innovation happening life insurance sector.
Okay, on that positive note, thank you both of you for taking the time and speaking with us. Thank you. Thank you for watching this edition of Life Sessions presented by HDFC Life in partnership with ET Now. As we heard today, the real challenge isn't just awareness, it's action. From tier 2 towns to metro cities, from digital journeys to branch conversations, protection needs to become not just an option but a priority. With institutions like HDFC Bank and HDFC Life working in synergy, we're already seeing how data-driven insights, contextual engagement and customer-centric innovation can bridge the gap between need and coverage. So here's to building a future where every Indian, not just the financial savvy, feels empowered to protect what truly matters. That's it for now. We'll see you in the next episode of Life Sessions presented by HDFC Life in partnership with ET Now.